I'm Alan Kenny, Managing Editor with REIT.com, and I'm in sunny San Diego for REIT World 2012, NAREIT's annual convention. Joining me is David Toti, Senior Managing Director with Cantor Fitzgerald. David, can you give us an idea of what's been the big story in 2013 for REITs?
I think going forward, the big story is actually going to be not what you would expect in terms of fundamental issues, balance sheet issues. I think, honestly, the issue is going to be REITs maintaining investor interest. After many years of outperformance, balance sheets are much stronger than they've been in a long time. There's earnings growth. There is core fundamental growth. The question is, with pricing elevated somewhat and dividends a little bit less attractive in terms of yield, the broader investor base is saying, I can find relative value elsewhere on the globe. I think I'm paying full price for these stocks at this point. So I think the challenge for REITs and for NAREIT is going to be, how do we keep investors focused on the REITs as compelling investment securities going forward, especially into next year, where GDP growth could be picking up, the economy could be recovering slowly.
Give us a sector that's going to surprise investors next year.
I think there's two levels to surprise. First of all, I think the sector that will surprise at the fundamental level in terms of rent improvement, demand improvement, is going to be office. It's been pretty lackluster. We're seeing the start of improvement from tenant demand that's been on hold through the election. And it's probably going to stay relatively muted through the fiscal cliff resolution. But I think next year businesses will be able to underwrite expansion in the next 4 years of the economy and say, we can take down space, we can grow, we can hire, we know what the landscape looks like. I think that'll be a big driver of fundamental demand for the office space. From a performance perspective, I think the apartments are going to perform quite well next year. They've been big underperformers this year. Fundamentals remain very, very strong. I think after a couple of quarters of housing recovery coinciding with strong apartment performance, investors are going to come back to the group and say, these stocks are trading close to NAV. Some of them represent relative values. I think from a performance perspective, they could be stars next year.
And as you mentioned, REITs have had a pretty good run in 2012 and 2011 as well. Do they still have room to go?
We just reiterated our RMZ forecast last week, actually. We moved our target up. We think that the returns for the REITs overall are going to be in the high single-digit, low double-digit range. So not wildly compelling from a return perspective, but still positive. We think that the returns are positive relative to prospects for the S&P. So I don't feel it's a compelling case. It's still a pretty attractive case relative to broader security returns. And then you have the 3.5% dividend yield on top of that as well. So not wildly compelling, but still attractive.
All right, well, thank you very much for joining us.
Thank you.
And for more on this and other REIT news and analysis from REIT World 2012, be sure to check out REIT.com.